Hey guys, what's up? It's Ace coming to you 5:30 p.m. November 6th. I just wanted to make a quick video. I wanted to continue the educational indicator series that I started a little while back. You might check out my channel. I have one on MACD. I have one on the Bollinger Bands and the Bollinger Band Squeeze. I have one on support and resistance, which is technically not an indicator, but I wanted to continue this indicator series because I think it's important for especially beginning traders to know that there are some really great tools out there for them to be able to use to be able to make trades and be successful in trading. So the one we're going to cover today is what's called moving averages. Moving averages, which is what we have on the chart here, this yellow line, they are simply used to determine trend. And they're also used as dynamic support and resistance levels. And I'll explain what I mean there in just a moment. But let's just talk about it as far as a trend trading indicator and how you can form a bias by looking at the moving average. So really the simplest way to put a moving average on your chart is just to plot it. You go into studies and thinkorswim, you go to edit studies and you type in simple moving average and there you go. You get your simple moving average, you plot it on the chart, okay? There are several types of moving averages. There's simple moving average, exponential moving average, you have linear, you have weighted. Most traders that I know of use either simple moving averages or exponential moving averages. I've been trading 10 years. Those are the only two that I use. They suit me phenomenally. I do very well with them. So really, the simplest way to interpret this moving average, guys, is that when price is above the moving average, we're in an uptrend. When price is below the moving average, we're in a downtrend. Once again, price above the moving average, we're in an uptrend. Price below the moving average, we're in a downtrend, okay? So that's about the simplest way that you can look at a moving average and think, hey, we're above this 20 SMA. Right here, we broke above it, it's time to buy. And look, if you did that, you actually didn't do too bad. I mean, you broke here at 159, and if you would have stayed in this trade until it broke the moving average, you would have gotten out at 227.33. You would have been in the trade for about 2 months, and you would have made a whole lot of money. And that's absolutely one of the simplest ways to use a moving average is when price is above it, you're long, and when price is below it, you're short, okay? However, though, what happens when you get head faked? And what I mean by that is what happens when you have price like this? You're like, I'm above the moving average, I'm in a trade, and then it breaks below. Do you get out of your position? What if you're not in a position here? Because maybe it's been running too long. The minute it breaks below, since you're under the moving average, like we said, when you're above it, you're bullish, when you're below it, you're bearish. Does this mean that you should take this trade? And after this candle here, should we go ahead and get short on this candle because it opens in the lower range of this longer red candle here, this wide range body red candle? Should we open a short position as soon as we open towards the lower range of that previous day's candle? I don't know. I mean, if we followed that philosophy of when you're below moving average short, when you're above long, then yeah, you would. But you would have gotten smacked because you would have taken the short and then the very next day this thing ripped right back up and continued on going up. So how do we go ahead and filter out the head fakes? How do we filter that out? Like, here's another one, down and then back up. How do we filter these out? Well, one of the ways we do this is we plot more than one moving average on our chart. We actually go ahead and we plot multiple moving averages on our chart, because then what that does is that's going to give us a clearer signal of where price is trending, whether it's up or down. And also it's going to allow these different moving averages. When I say different, I mean different speeds, different look back periods, which create different levels of speed, how quickly these lines move. And it's going to create what's called dynamic support and resistance levels. And let me demonstrate here exactly what I mean. So why don't we add in a 50? And let's see what this looks like. See, now the picture's changing a little bit, right? So now let's go back to our previous analysis here where price is going up. It snaps the 20. Should we get short? Well, no. Why would we? We have another moving average right below it that can very well provide a dynamic support level for price action here. And that's exactly what it did. It bounced right off the 50 and it moved back up above the 20. Hence, with moving averages on your chart, not only can you tell price is definitely in an uptrend because it's price is above the 20, price is above the 50. Even when it broke through the 20, it's still above the 50. And generally, unless price breaks the 50 moving average, when price goes below it, is generally when people start looking for trend changes. But when it breaks the 20, it can easily pop right back up, which it did, and use the 50 as support. So you could have been there, saw that it bounced, and then actually instead of taking a short position and losing to this bounce, you could have actually taken the bounce and rode it above the 20 and made some good money there. So that's one way that that you use the moving averages, is definitely as dynamic support and resistance. Keep in mind when we're looking at this, how do we know we're in an uptrend here? Yes, price is above the 20, okay, but keep in mind that when you have the faster moving average above the slower moving average, that's solidifying that over a longer period of time this stock is in a definitive uptrend. Okay, so that's just giving you more confidence, if you will, more confidence in your bias on the fact that this stock is trending strong to the upside because it's above the 20 and it's above the 50. Now let's go ahead and add in 100. Keep in mind, the longer we're going out on time frame, the longer that this stock is considered bullish or bearish if it is above or below that particular moving average. So let's go back here. Here you'll see price was moving up, right? But look at this, the moving average, this longer term moving average was flat. Okay, so even though price is going up, this longer term 100 simple moving average is flat. That tells me that in the long run, meaning if we were to look at this maybe on, I don't know, maybe we were to look on this on a weekly time frame or a monthly time frame, this stock might actually be flat. Let's see if we can check that out. What was that? That was November, I believe. Let's just see here. That was November 2019. Let's see, November 2019. And so right here, November 2019. Okay, so in actuality, it was flattening out a little bit. I mean, it's still in an uptrend, but it was definitely doing some pullbacks here on the weekly. And look at this, you have the 20 period weekly lying flat right at the same place as the 100 was lying flat on the daily chart. So the whole point with that, and you can always do this, you can look back on higher time frames. But for me, if I looked at this, I would say, okay, right now, this stock is in the shorter term, it's bullish. Maybe in the longer term, it might be flat. And not as bullish as I'd like it to be. But you can still use this, once again, as dynamic support and resistance, and then it falls down below, price falls below the 20 and the 50, and it's below the 100, so you're good taking shorts there. Then as it comes back up, and it continues this long bullish run, look at what happens to the 100. The 100 curves and points up. Now, when you get this kind of a situation, guys, where you actually have all three moving averages pointing up like this, that, my friends, is a very strong trend to be in. When you got the 100 pointing up, the 50 pointing up, the 20 pointing up, I mean, and prices above the 20, you can definitely buy in on any dip you see here, and then of course it just ripped right here. But that's really where money's made, is when you get all these moving averages literally pointing in the same direction. That's when you want to be in the trade, okay? I'm going to bring in a shorter moving average real quick. I'm going to bring in the 10. And now the interesting thing is when you get to these really short moving averages, to me, this is starting to show a really relative strength, okay? And what I mean by that is for the price of the stock to be able to get above a very short moving average, it has to be moving with momentum. It has to be really showing a lot of relative strength in the market. That's the only way the price is going to get above these shorter terms. If the shorter the moving average, the more the stock has to be just really running with a lot of momentum in order to get it to push over that moving average, okay? So we're looking at a 10 right here, and you'll notice that when we're falling down, let's start over here. When we're going up, but we're not going up with what I believe is a lot of momentum, you'll see that price really barely gets above the 10, and then it hugs the 10. It goes back below the 10, up to the 10, bounces off the 10, up to the 10, okay? There is definitely moving up. It just is not moving up with as much velocity, with as much momentum as here where it's moving down. Because here in this area, I mean, gosh, look at this, guys. If you look at this right here, price never even touched the 10. It stayed below the 10. It never touched the 10. It never bounced off the 10. This thing was moving so fast to the downside with so much selling pressure, it never even touched the 10. And look at this. You have also the 20 curving over, you have the 50 curving over, and even to a smaller extent, the 100 curving over. So, when you see this kind of price action and you see all of these moving averages pointing down, you could bet your bottom dollar that this thing's going to continue going down for the most part. Obviously, you can be using other indicators to confirm your price action or your analysis, but by all means, if price is hanging out above or below a 10 SMA, the stock's moving is basically what I'm saying. So it's a great way to be able to tell what's moving and what's not moving. Here, this is another good example to show you guys. Look at this. Moving averages can show you chop too. Okay, if we just highlight, whoops, let me just go, I kind of screwed this up. Let me start over again here. If we highlight this area, look at that. Chop, 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 chop. But look at what are the moving averages doing? They're literally lying, the two fast moving averages, the 10 and the 20, they're lying down on top of each other right here, right here. Look at this, a quick cross down and a quick cross up. The moving averages can show you when the market is not trending or when it's getting choppy. Whenever you see moving averages lying down on its side like this, that's not a market you want to trade, unless of course you're doing some kind of a delta neutral strategy like maybe iron condors or something like that, where you're just literally looking to sell premium above price and below price and not really worried about the directional bias per se. But you don't want to be trading long or short when the moving averages look like this. You want to be either out on the sidelines into another stock, but you don't want to be trading this unless, like I said, you're selling premium and you're in a space where the volatility might even be a little bit lower, so you're just collecting that easy money at that point. So I hope this helps to give you guys some clarification on moving averages and how to use them. Really, I think we pretty much covered just about everything. I'm just going to go over a couple of additional charts and then we'll wrap up the video just to see if we can get a couple of other examples here. The one thing I do want to talk about before I let you guys go is I do want to talk about how you can use the moving averages to trade. Now, this is a great example of, wow. I mean, look at this chart, guys. Do I even need to tell you, is this bullish or bearish? I mean, seriously, look at price action. This is just amazing. Look at these moving averages. They're literally just pointing upwards. They're all stacked nicely on top of each other. Look at this. Price is above the 10. I mean, you could have gotten in, here, literally as price retraced a little bit, it bounced. You could have gotten in here and you could have taken this literally all the way up. I mean, this is just gorgeous. Let me just highlight this correctly here for you guys. Okay, doesn't want to work. There we go. Okay, so right here, when price broke above the 10 and 20, 10 and 20 were lying down on top of each other. This is also another strategy, is when price pulls back into the 10 and the 20, and the 10 and 20 lie down on each other, and then price immediately breaks up and thrusts up and starts ripping up, and then you see these two moving averages pulling away from each other and creating space. That's another sign of momentum. And look at price. Price is just literally riding that 10, and it's not going beneath the 10. It's barely touching the 10. And this is the kind of move you want to be in. You want to be in this move all day until maybe, somewhere up in here when you see price starting to like gap down and hit this, smack the 20. Well, yeah, you get out at 76.32, but you got in for the ride at 68.16. You made plenty of money right here. Plenty of money, okay? And the moving averages are literally pointing the way, showing you kind of what's going on there, okay? Another real quick strategy that a lot of traders like to use is moving average crossovers, okay? So you'll see the 10 and the 20 crossed over here. Crossed over here. And what happened? When the minute they crossed down and price got below the 10 moving average, we went down. We definitely saw a retracement here, a pullback, and then it dumped again and continued to dump all the way down to 53.15, okay? So then price crossed again here, 10 crossing the 20. And what happened? Price got above the 10, okay? And here, by the way, when price is going down, it did get below the 10, the 20, and the 50 and the 100. So this is definitely, this whole little area is pretty bearish. But once price 10 and 20 crossed, even though price was still below the 50 and the 100, it started moving higher. Now, if you're going to play moving average crossovers like this, you want to wait for price to get above the 100. That's my personal opinion. I would not get in. All this area right here, and let me highlight this. No, thank you. I don't want to be in at all here. Even with the crossover, I want to wait. It pulled back, bounced on the 20. Notice it bounced on the 20. Once again, dynamic support and resistance ripped up, okay? The only time I'm getting involved in this price action, guys, is when I see price break above the 100. Because now, here, when price starts moving up, it's above every moving average, the 10, the 20, the 50, the 100, okay? The 10 and 20 are pointing up. The 50 still is not. The 50 is still flattening out. So if you wanted to be hyper conservative, you can still wait, okay? But you'll see we got a retracement here and we got a push back up, and it's just hugging the 10. It's literally hugging the 10, and then here we get this rip. On this rip right here, you'll notice what happens. The 50 curves up on that rip, and that really, I mean, even if you wanted to be very conservative, you can start getting in there and riding this thing up. Once again, as long as you're above the 10 moving average, there's really no reason to get out of this trade at all. I don't think I would have gotten out of this trade until I broke through the 20 right here, and then I would have gotten out. We didn't break through the 50. We did get a little bit of a bounce off of right above the 50, and then boom, we gapped on looks like gapped on earnings, and then started riding the 10 again all the way up. So anyways, I hope this gives you guys a little bit of insight on how to use these moving averages. They are very, very cool. Everybody that I know of just about that trades use some form of moving averages. They really do help you to see price direction. They really do help you to identify dynamic support and resistance levels. They help you to possibly look at is it good to execute a trade when there's a moving average crossover. Keep in mind, you want to use other indicators, other things to help you out, in determining, do I want to take a moving average crossover? MACD is good for this. Look at this. As soon as this crossed over the 10 and the 20, where's the MACD? MACD is below the histogram. There's a lot of momentum right here coming down after this cross. And you got the MACD separating its lines. If you guys have not seen my MACD video, please go into my videos and look at the MACD video. It'll explain everything that I'm talking about here. The MACD, I've made so much money with the MACD, I can't even tell you. So guys, definitely check this out. But you'll see the MACD is confirming the moving averages and the price action. Even right here, remember when we said that that the moving averages price pulled back into them and then it started to lift up. Look at this, the MACD is confirming that. You got the MACD above its signal line. You got the separation here. It's just a beautiful thing, guys. Even when you get the MACD crossover here, right after the MACD crossed over and started heading up, you got your moving average crossover. So, I mean, you could look at your moving average crossover and you could see, hey, where's the MACD? Yeah, MACD's definitely on the rise. You got the histogram pumping up, showing momentum. You got the MACD line separating, showing momentum. Now you've got the moving average line separating, showing momentum. So this is the way to utilize moving averages to make money, okay? Guys, I hope you enjoyed the video. If you have any questions, post them down below in the comments or let me know what you thought of the video. Please throw a like on the video as well. I'm going to be doing more educational videos coming up here soon. I'll try to do maybe another one this weekend on some other indicators that I want to talk about. And definitely subscribe to my channel so you guys don't miss out on any of that content, okay? Guys, have yourself a great rest of your evening and trade well. Talk to you soon. Bye.